Big day yesterday as we talked with Stephen Moore. GDP number out for the Q2. 3% GDP growth, which was better than expected, although there may be some devils in the details. And then Jay Powell took to the podium to say he's standing pat with interest rates because basically things are stable and, let's just move along at a consistent pace here. Essentially, that was it. Although there were two dissenting members of the Fed on this, which is not cutting rates. They wanted a 25 basis point cut, which is highly unusual. And it seemed to me that there was a disagreement over whether the sort of inflationary pressure of tariffs was a one-time thing, was a one-off thing, any price increases associated with tariffs as Trump is working through these trade deals. Is that a one-off thing, or is that something that is going to have some stickiness? And Powell is concerned about stickiness, and those two Fed board governors who wanted the 25 basis point rate cut were arguing that it was a one-off thing. So what is the net of the information that was injected into the marketplace yesterday, both the data as well as the arguments? For more on this, we're pleased to be joined by Jim Iuorio. He is the host of the Futures Edge podcast, special contributor to WirePoints, wirepoints.org, all things Illinois policy related, and the proprietor of Brandt's Restaurant in Palatine. Jim, thanks for joining us. Appreciate it.
Thanks for having me, Dan.
So do I have that right in terms of why Powell zigged when two Fed members wanted him to zag?
Well, okay, so the two Fed members who wanted him to zag, let's break that down for a second. Both of those two people, Waller and Bowman, are positioning themselves to be the next Fed governor.
Yeah.
So this is more their job interview. So this is like a mini mutiny on the Fed. They're just telling the president, see, we're not with him. We'd have cut rates just like you said. Now, this is a tough one for me because I actually believe there should be a small rate cut. And there's a market mechanism that will tell you if the rate cut was premature. Like back in September when they cut rates by 50 basis points, long end yields, 10-year yields went higher. That was a signal from the market that that was a wrong move at the time and that it could spark inflation. So right now, I actually think they're clear to ease, and it wouldn't worry the market about sparking inflation. To think that Powell's like digging in his heels against President Trump, that seems very reasonable to me because I know you're that kind of guy. I'm that kind of guy. Jay Powell seems like that kind of guy. You try to bully us, we'll probably move the other way. That's why it's this weird. The human element of this whole thing is so fascinating to me. But I do think that rates are above where they should be, the neutral rate. But the fact that the president keeps slamming the chairman over the head with a sledgehammer, I don't love that personally. You?
Well, I mean, it's probably not productive towards the ends that he seeks. I suppose that's right. But it gives him basically someone to use as a scapegoat if things don't go well. And there were some and it was interesting. The market reaction to a better than expected GDP number was pretty tepid. And was that because Powell didn't signify that a rate cut is forthcoming in September, or was that because of some of the underlying numbers like private domestic investment embedded in that GDP number?
So it's a combination of both, which I think is very interesting, is that the number appears good. So it took out but prior to the number, we had the market had about an 80 to 90% chance that the Fed was going to lower rates by a quarter basis points at the September meeting. That number shot down to less than half. So the market is saying, okay, the Fed might not be easing like we hope they would, which, by the way, this pattern has gone on for 2 years now where we price in all these rate cuts and then they never come. But then when we look into it and we say the number itself wasn't as good as it looked on the headline. So it's like Powell's not going to be lowering rates because of the number, but is the number good enough to justify him not lowering rates? And the answer to that is, well, maybe. And that's why the market kind of shrugged its shoulders and didn't know which way to go. Because the market right now is weird. In the past, we always wanted lower rates, and that's where we're going to go higher. Now we seem to want to a belief that things aren't falling apart, and we got that. But anyway, the big boost to the stock market didn't come till later in the day when Meta and Microsoft blew out earnings. So that's what the boost was later in the day. So the shrugging the shoulders on the Fed was an appropriate response.
And the 15% decline in private domestic investment, that's explained by the whimsical nature of Trump's tariff policies?
Like the way you put it. So I always said 2025 was going to be tumultuous and filled with lack of certainty. And the first half of that was certainly that. And to think that some of these people don't want to do capex, the smaller companies, that seems perfectly reasonable until we get some clarity. But we are getting some clarity now. People realize everyone was so terrified of the tariffs. And the personification of that was on April 8th. That move down to the lows in the stock market was the most asinine thing I've ever seen. I polled like 200 different money managers, and every one of them said that they were just getting calls from clients saying, essentially, Orange Man bad, he's going to destroy the economy, sell everything. Now, if someone wanted to go piece by piece from policies and come to the conclusion that, well, I don't want to be as much in stocks, that makes sense. To be emotional like your hair's on fire and selling it all down on April 8th, that to me didn't make sense, and it's part of why we rebounded so hard. But the point I'm trying to make is that, yes, there has been uncertainty all year. We are going from one economic policy to a distinct other one. I believe we're going from bad to good, but the transition itself sometimes is difficult, whether you're going from bad to good, good to bad, or whatever. So I actually think it's reasonable, but I think it's dissipating now.
The good news on the good news front too, embedded in the numbers, some concerning numbers within the numbers, and some that are pretty positive, is the price index for domestic purchases rose only 1.9% in Q2, down from 3.4% increase in the first quarter. So you're not seeing inflation rearing its ugly head.
No, so these people, these economists, okay, and there's something really, there's a punchline to this whole thing too. These economists like tariffs are inflation or tariffs are inflation. They're not always inflationary. History shows quite clearly that oftentimes the exporting country subsidizes the exporting company and importing company, reduce their costs often to remain competitive. Only then does it get to the consumer. And the consumer has choices to go other places. The part that's funny to me is that we haven't seen inflation, which, by the way, we at the Futures Edge and Unfiltered Investors have been explaining all year why there wouldn't be inflation associated with the tariffs. And like you said before, a one-time price adjustment isn't inflation. Inflation has to be a creep and a persistent rate of change, and that can only be fueled by monetary issues, by throwing money into the system. But here's the funny part. All these leftist economists we see these numbers, we see these trade deals, and they're all like, yeah, of course, we didn't say we were going to see inflation today. We said we were going to see it in 2027. Did you see all that? Like, are you guys really that desperate that you're pushing it out 18 months to say when the inflation's coming just because we can't see it today? Because it's not there.
Yeah, well, right. I mean, all the leftist economists. I mean, the Krugman and the gang, who are in favor of just about every tax increase under the sun, but aghast at tax increases called tariffs. I mean, so yeah, it's.
Let's just raise the corporate taxes. We'll just double them. But those guys they're unbelievable right now. And the part watching them squirm when things are going well is funny to me. I wish I didn't have that evil characteristic, but I think it's so funny hearing those guys say, well, no, I didn't say inflation was coming today. You misheard me. It's coming in 2 years.
Well, then, so if there's very little sign, you mentioned some of the hysterics early on in the term, they have quieted down. Very little sign of recession in the offing. But maybe there's not so much optimism about a boom either. I mean, 3% growth isn't bad, but I'm just saying the idea that you're going to see the golden age that Trump promised, that may be overstating the case, at least in the short term.
In the short term, but I don't think it's overstating the case in the longer term, because the key to me is making it easier for the corporate sector to produce. That's the way to handle inflation from a supply side. You had Stephen Moore on yesterday. I'm sure he's a big advocate of this, and in this situation, he's right. You remove some of the regulations, you let companies operate, that's going to handle the inflation on the domestic side, and the companies will do better and higher. I do think we're in a kind of a golden age. Now, that doesn't mean the stock market just heads straight higher, because a lot of people forget that market positioning in these assets is oftentimes something that dictates price in the short and medium term. So I don't think that necessarily – I like the stock market right now, but that doesn't necessarily mean it has to continue higher. But as far as the economy goes, I think getting through the transition period in 2025 was going to open the doors kind of to a golden age that begins in 2026. And you know me, I am usually – someone who tries to find fault in everything. I want to find fault in this, and I'm looking, but right now it seems like things are pointed in the right direction.
I wanted to get your reaction to something locally here. We've got one of those pesky billion-dollar deficits at the city within the city of Chicago, and a lot of grumbling about budget shortfalls in the suburbs too. But anyway, as France and Sweden are moving away from the idea that taxing the wealthy in their countries is the path to prosperity, Brandon Johnson is moving in the other direction, at least rhetorically at this point. Here was his public spitballing the other day about what to do about Chicago's budget deficit.
The city of Chicago has a massive $1.1 billion budget gap to fill ahead of next year. And with the mayor promising not to once again pitch a property tax hikes for city residents, which council, by the way, unanimously rejected this year, what's the game plan for next year? He says he's looking at creative ways to raise tax dollars. And today at City Hall, we learned exactly what's on the table.
Everything has to be on the table. Everything has to be on the table.
The menu on that table appears to target Chicago's ultra-rich, namely finding ways to extract more tax dollars from the 127,000 millionaires that now call Chicago home, as well as the 25 billionaires residing inside these borders. As for the concerns that these ultra-rich will leave if they get taxed more,
They're not leaving Chicago. So this notion somehow that we're scaring millionaires away, it's just the opposite.
Nobody's leaving, Jim.
I have to respond to that.
Yeah, nobody's leaving.
All I'll say is this: is that you remember? You and I are old enough to remember when Detroit started to do the same sort of thing, and they came up with a 1.5% income tax if you lived in the city of Detroit. And we all saw what happened to the edge. Well, Detroit itself, and then the edges of Detroit. Across the street in the suburbs would be these big, beautiful houses and manicured lawns, and in the city it'd be these dried, old up, abandoned homes, and that's what will happen. He is picking on the people who have the greatest options. When you are a multimillionaire, I love when they say millionaires. By the way, millionaire used to mean something until they destroyed the dollar so much.
Yeah,
now,
right, exactly.
Everybody's going to be a millionaire in about the next 6 months because the dollar is going to be worth. I'm just kidding about that. But anyway, so they're pushing people against the wall who have options. And he thinks, they're not going to leave Chicago. What is he basing that on? I see people, because it's summer at my restaurant in Palatine, 5 different people a night will come to me and say, Jim, I've been gone. I've been gone. I had to live 6 months in Florida, but I'm back now for a few months here to visit family and things. I see it all the time. And these are not people who are takers from the system. These are people who are givers to the system, and now they're in Florida.
Yeah. Well, I guess he figures if he says to a billionaire that you're not allowed to leave, then they won't leave.
Right. This is, everybody should read the book Atlas Shrugged, but we should rename it Ken Griffin Shrugged. You know what I mean?
Yeah. Maybe slightly overstating Ken Griffin, but yes. But yeah, I take your point. He's hardly the only one. I mean, just
he was the personification of the move, is what I was trying to say.
Yes. Well, I mean, the folly of suggesting that people with mobility, as you say, the people that have the most options, will just sit back and take it because they have affinity for the city. I mean, okay. I mean, you can try that. I mean, just ignore all the real world evidence. This is the first person to try this approach. But okay, all right.
I will say this about Brandon Johnson. I genuinely don't think it's possible to do as bad a job as he has done if your intent wasn't to do a bad job. So just even think about it there's only really 2 or 3 things that a mayor must do to be considered even a decent mayor. 1 is crime. Is it going up or down in your tenure, or is it at acceptable levels? 2 is public transportation. Our public transportation is, to call it awful, is giving it a raise. I ride the Blue Line. It's a mobile homeless encampment. I only ride it on Thursdays and Fridays when traffic's terrible because I get harassed every day on it. And 3 would be to make things open and welcome for money, whether it be on the personal level or the business level, to bring it into your city. He's failed conclusively on all 3 of those things without any debate to the other side. I mean, so he had to have done it on purpose, in my opinion.
Just a heads up. I mean, I just don't want you to get in trouble. No vaping on the Blue Line when you ride it. There's a real crackdown on smoking and vaping on the Blue Line going on. Yeah, well, I know the CTA, yeah, generally, yeah.
Every car is filled with smoke on the Blue Line. There'll be people who just sit right down next to you and take out a cigarette. This is not. If people out there think I'm exaggerating, not at all. I have to put my take my sweatshirt that I wore on the Blue Line and kind of air it out when I get to my office just to make sure it gets rid of some of the smoke smell. Well,
he's on it. BLM Brand's on it now. The beatings and the robberies and stuff, not so much.
Well, they can stay.
Yeah, it's as long as you don't smoke when you're doing it. That's the important thing.
And by the way, anyone thinks we have a homeless problem in this city should spend some time on the Blue Line, because it's not a homeless problem at all. It's a schizophrenia, addiction, mental illness problem. Nobody's living on the Blue Line because they don't have a home. They're living on the Blue Line because their life is completely messed up. So if we want to solve this problem, I think it's kind of better to identify the actual problem. Say, they just don't have a home. Let's give them a home. No, let's give them some sort of mental treatment, but I don't know what it is. That's not my expertise, obviously.
But just as an aside, I mean, in talking about out-migration, and again, Steve Moore's outfit did a state-by-state study, the Rich States, Poor States analysis they do annually. More than 1 million people in the last decade have net left Illinois, taking about $100 billion in gross domestic product with them. So that's a real people and real money. Pritzker and Brandon Johnson don't recognize it, that they don't have to, but those are the numbers. So take them as you will. But the exchanges, I mean, any indication that there's, because they've long rumored and the threats if CT got its way with the LaSalle Street tax and so on and so forth. Is there any more rumbling that the exchanges, being what they are at this point, could pull up stakes anytime soon?
Well, yes. I don't want to comment too much on that. These are friends of mine who run the CME.
Yeah.
But I will say this. I know nothing. Intentionally, I know nothing about this because I don't want to. I don't want any conflicts of interest. But again, why would you stay in a place where they beat the hell out of you all the time? It makes no sense to me. Now, the trading world is different. It's mostly it's a profit center that stays here. You can move that quite easily. Everyone's like, well, you can't move the trading floors. The trading floor is one trading floor left for the CME. It's about 250 people that could be replicated now via some network digitally. We don't, because we all kind of like it down there. So Chicago's playing a dangerous game. And we've seen this a lot of times before. You can't just keep knocking into people like this and expecting them to get back up. Sometimes they'll just walk away. So,
Jim Iuorio, host of the Futures Edge podcast, special contributor to WirePoints, wirepoints.org, all things Illinois policy related, and proprietor of Brandt's Restaurant in Palatine. Jim, thank you as always.
Thank you, brother. See you.
And Jim joined us on the Turnkey.pro answer line.
There's only one radio show in Chicago talking about today's biggest stories and telling you what they really mean. That show is this one, Chicago's Morning Answer on AM 560, The Answer.
You need a construction company, but who?
Call Croscom.
A construction company you can trust that shares your Christian and conservative values. For decades, Croscom has been doing work in Chicagoland, Northwest Indiana, and Wisconsin. Roofs, siding, windows, doors, gutters, basically everything for your home or business, even solar. Quality work and professional services that make you feel great about your decision to work with Croscom.
Call Croscom.
630-871-5500. Give them a chance to earn your business. If your repairs are due to storm,